Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day. It's March 7th, Wednesday here, and we got a lot on the economic calendar here, so let's kind of jump right into it. We'll start with the ADP employment for the month of February. The last number in January was actually revised about 10,000 new jobs higher, so it went up by 10,000. So the new number comes in at 243. I think I see 244, so this might be, but let's say 243, 244 new jobs created in January, and the month of February again comes in at 235,000. This brings us to 5 months in a row that we had over 200,000 new jobs created. Almost every month of the year, we're or at least around the 200,000 range. We had quite a few months over 200,000, some just a little under like the 190 range, even one that was pretty slow, like in the 90s on there. But overall, been very great, very good year for employment here. Productivity, it dipped a little bit in the last number. We had a 0.1%. The forecast is supposed to be the same, but it came in at flatline. So it flatlined productivity for the fourth quarter. Unit labor costs, last reporting came in at 2%. The forecast was supposed to go up to 2.2, and it came in much hotter at 2.5%. So this will help give us be interesting to see once we get Friday's numbers with the jobs, see if price wages go up. So you know, not price wages, like wages go up again. So this could be a big part of the unit labor costs is wages rising, and of course that's going to spark up more inflation fears like the last one did. That's after January's number came out, which was one of the highest in like 7 years. The market's kind of acted negatively because of inflation here. That's with inflation. So if this continues, you may still see a reaction as well. Last but not least, this will be released around 11 o'clock Pacific Standard Time. We're not to that time yet, but the Feds will be releasing their beige book around 11 o'clock Pacific Standard Time here. So let's kind of look over at the headline news. Currently, stock market's down. It's down. Dow is down about 200 so far this morning. A lot of it is taking precedence. The Gary Kahn's resignation from President Trump's staff here. Now, he's an economic advisor. He's from Goldman Sachs. A little background. A lot of the investors out there believe he's more kind of a level-headed person in that Trump administration. Uh, these are what's kind of being reported out there. And he's kind of being given the credit of getting the tax cuts through. But the reports are coming out that he opposed to the new tariffs that Trump was trying to release last week there, and that might be, he's not having the pull or whatever it is he used to. So that's what's leading to his resignation. And of course, the markets aren't liking that because they apparently like him. So they at least have a lot of respect for him. So the markets are kind of reacting negatively to that. And top of the, as we talked about tariffs, Europe is coming up with their own form of tariffs in retaliation to President Trump's tariff announcement last week. So it'll be interesting how that might play out. Again, that creates concerns that on a global level, a lot of the multi international corporations won't be able to expand as much. So that might limit our expansion, make us be more of a protected country, so to speak. So it'll be more domestic, and the stock market isn't liking that as much as they want that further reach out there, more business and such. So let's see how the bond market's reacted right now. We started the morning up higher. We've come down. We're kind of in this middle. We're kind of going in this middle range here between the 25-day moving average, which is our next resistance level, and this floor of support at 101.891. Right now, there's really no difference in terms of pricing from where we left off yesterday. So pricing is about the same as where we left off yesterday. Treasury, pretty much the same thing. We kind of where we were yesterday at 28.7. We start off much lower. We were testing this 25-day moving average. We haven't been able to break below that. And again, it's at 2.87 so far this morning here. All right, so that's pretty much it. If you guys want to get more data, just come over to Twitter. I do post market updates on Twitter. Feel free to stop by and see me, and my handle is at Mike Bjork. Hope you guys enjoy the rest of your day. Thanks so much for watching. We look forward to see you guys tomorrow. Bye bye.